Are you planning to secure a mortgage soon? The US election period might be the time you get the lowest rate. Watch till the end.
Hi guys, my name is Ezekiel.
My name is Kike.
And we are the Adeleyes. Welcome back to Money CPR. In this channel, we'll teach you strategies and tips on how to win with money. In today's video, we'll be talking about why the US election period can be a good time for Canadian mortgages. If you want to know more about this, stick right to this video. Have you ever wondered why the US election influenced Canadian interest rate? Even though the US election happens across the border, it can significantly influence Canada's economic condition. Let's look at a few reasons why. Number one, economic uncertainty leads to rate reduction. During the US election period, uncertainty in the global market typically causes the central banks, including Canada's, to keep rate low. The Bank of Canada tends to take a wait-and-see approach to stabilize the economy, sometimes choosing lower rates to encourage consumer spending and investment. Number two, close ties between US and Canadian economies. Canada's economy is heavily interconnected with the US economy, with about 75% of Canada's exports going to the US. Any shift in US policy impacts the Canadian market. To ensure stability, Canada's central bank often keeps interest rates lower when economic shifts are expected in the US.
Now, let's look at how interest rates have historically trended lower during the United States election period. In past US election years, both the Federal Reserve in the US and the Bank of Canada often lower their interest rates. For example, during the 2008 and year 2020 elections, we saw both countries lower their rates to boost economic confidence. Number two, volatile markets and flight to stability. This leads to a flight to safety where investors look to secure assets like government bonds because they are safer. To counter this and support the economy, the Bank of Canada tends to keep interest low to stimulate consumer activity. The current Bank of Canada interest rate is 3.75%. Do you think that's still a good deal for a mortgage? Let's do an historical comparison.
Historically, Canada's mortgage rates have been much higher, often reaching about 5% to 8.1% in June 2022. A 3.75% rate is still relatively low. Think about it, especially with the possibility of rates increasing after the US election period settles. Another thing I want us to consider is the potential rate increase post-election. Many experts predict rates may climb after the election due to global economic adjustment and inflation management. So locking in your interest rate at 3.75% could help you secure a lower payment rate compared to a potential future hike of this interest. So if you want to make a move, now is the time.
So let's look at some practical benefits of getting a mortgage during this period. Aside from the numbers, there are practical reasons why getting a mortgage during the US election period could be beneficial. Number one, lower monthly payments. Yay. Is anybody excited for that? Securing a lower interest rate means your monthly payment will be more manageable. For instance, on a $400,000 mortgage with a 3.75% interest rate, you save roughly about $350, compared to a 5% interest rate. But I want you to remember something, that this 3.75% is just the Bank of Canada rate, right? You still have to factor in the prime that will be put on by the bank. So maybe you're talking about 4%, maybe 4.25%, depending on your credit score. So here's a screenshot showing the interest rate from different lenders in Canada. Number two, long-term savings on interest rate. With a 3.75%, you can easily save thousands of dollars for the life of your mortgage, right? But remember, in Canada, we always renew our mortgage every 5 years.
Except you want to be renewing your mortgage only during the election period. Right?
Yeah, so keep that in mind, okay?
So right now, guys, here are some final thoughts and tips if you are considering getting a mortgage during this election period, I mean the US election period. Number one is to lock in rates when possible, especially now. If you are planning on buying, locking a lower rate now could save you money if rate rises after the post-election.
Number two, consult a professional mortgage advisor. A professional can help you understand your mortgage options and assist in locking in the best rate based on your financial goals.
Just so you guys know, disclaimer, we are not financial advisors, neither are we a mortgage advisors. We are talking to you, we are sharing with you based on our experience and what we have learned through research.
So there you have it, guys, a breakdown of why the US election period might be a good time to secure a mortgage in Canada. The unique economic conditions often create lower interest rates, and 3.75 is still a solid deal. Speaking of mortgages, you actually need a good credit score to secure a mortgage with a low interest. If you need help on how to boost your credit score in Canada, watch this video.